Hey, what's going on, guys? It's Will. Hopefully you're having a great day today. In this video, we're going to go over CTM stock. It's on a 9% rally today. We have about $3,000 profit on the stock for the long term, but we're looking at CTM from this breakout. We kind of talked about it, and we didn't end up trading it this morning, although we could have, as it really started to validate this previous resistance as a support and continued its surge up to $1.28 today. So that's 8.9%, about a 10% swing from that previous resistance. So basically, back from about April, it was consistently consolidating from left to right, but slowly building some momentum. It started to break out on Friday, and then after it broke out, it started to really surge up here. So you see it surge up to this $1.28 price point. And at this moment, we're starting to see this new trend develop. With the breakouts from those levels, now we're looking at this overall trend and seeing it possibly make its run up into this $1.73 range. From here, it's about a 37% increase, which would make a lot of sense if it's going to continue to align well with its market cap in relation to the financials. This is all great, and you might say, Will, it's gone up, all this. But if you look at why it's gone up, that's where it gets even more interesting. Castellum has had significantly good, you could look at today, it's having a great day, and it's actually up 31% over the last month. The last 6 months, it's up about 277%. And when we look at the financials, that's kind of going to give us the reason why. You can see quarter over quarter, the revenue has been holding super steady at this $11 million price point in revenue, and their net income actually has gone down. So you can see their net income, they're up 71% year over year. And when you look at the annual revenues, they're starting to just increase year over year. And that net income isn't exponential either. It's actually been cut down in the past few years. So then you pair that with the balance sheet. You might say, that's all good, Will, but why? Well, when they're seeing these surges over the past few years and their balance sheet, their total assets at an all-time high, and their liabilities there getting shrunken down as of recently, they actually paid down some debt even more. So the 17 million, it's actually a lot lower. And that's all good. But the main reason why is because of their consistent contracts. So if you take a look at Castellum Inc., they have this $103 million contract they recently signed in 2025, if it's going to work. There we go. For naval air support. They specialize in technology, in cybersecurity, as well as software, and processing large amounts of data for the US government. So you can see here that you got naval air systems. This is special missions, and it's a contract that consists of multiple intelligence, surveillance, reconnaissance, and targeting programs, but not limited to Maritime Patrol and Reconnaissance Force family. So again, working directly with the government there. And when you look at the overview, you can kind of see their latest news. It was right here in June 5th of last week, where they reduced their long-term debt of $12 million down to just $5 million. So how does that happen? How are they generating the revenue to be able to do that? What's allowing for them to get these $100 million contracts? Well, that's where we look at their IDIQ and Oasis Plus grant back in, I don't say grant, but contract that was granted back in December of 2023. Or 2024, but it was December 23rd. So just about 6 months ago, a little less than 6 months ago, they were granted this unrestricted Oasis Plus IDIQ contract, which means that they're eligible for on-demand servicing of the government with no ceiling value. So contracts of any size, could be $100 million contract, could be a $500,000 contract. But the idea is that they're there on demand, ready to service the government, which puts them at an advantage. Because they got that Oasis Plus, ever since then, they've had pretty consistent contracts rolling in quarter over quarter, and some of them, again, in that hundreds of millions of dollars, which puts them in a position to have that consistent revenue and building their cash reserves, as well as starting to have the ability to take on more contracts because they have the funding to hire more people. And they just recently were added into this level 3 appraisal, which means they have the ability to take on, it's called maturity level 3. Basically, it means they are granted the ability to be able to have new contracts that require them to hire new people because they've optimized their business performance and their operations. They have the ability to take on contracts that are bigger than their current size because of their onboarding and how they manage their employees and their systems, that they would be able to scale fast and hire more people if it came to a contract that would require them to hire more people. So it's a good CMMI level 3. It's a capability maturity model integration there for them. So I believe that is the full breakdown of their news. And when it comes to their stock, this is just a result of them paying down debt, seeing basically $50 million per year or $60 million per year in revenue, but their market cap has been holding below 100 million. So now they're starting to see some of that kick in. Investors are most likely finding them. If I'm not mistaken, if we look at CTM, we can find that actually they have this institutional interest as well. You can see some of the institutional holders actually have more increased positions than decreased positions. So that means you got Vanguard, you have State Street and BlackRock, which is a new position. And that means they're investing in the company with a good sentiment that they're expecting the company to grow in the near term. So big institutions are investing more as well, which is part of why we have long-term positions and why we've been covering them for the last few months. And we've had some good trades here from this 70 cent up to this $1.60 range back in March, and an 87-cent trade up to about $1.40. And now we're starting to see this move. And what we're going to look for is either this move increasing today or potentially seeing a dip at market open tomorrow and then playing that dip potentially for some bullish momentum. So if that opportunity presents itself, I'm definitely going to be looking at potentially making that trade. And if you guys want to join us live, it's the second link in the description down below. If you want to join Stockmate, new announcement I thought you guys should know. We just recently made it available for the next 20 Stockmate members. They get this mug. I thought it was pretty cool. It's a mug along with the free t-shirt. So you get this mug. It's a Stockmate mug for free. It's got a trading plan on it and also the text there, which I am not able to zoom in, but it's actually a trading plan and some good rules of thumb for when investing. And you have it there for your morning investing or when you're looking at stocks. It's pretty exciting. On top of that, when we're looking at Stockmate apparel, if you haven't already, definitely do be sure to grab the free t-shirt as well. If you're in Stockmate, which is a community of like-minded investors and also our daily live trading, you got this free t-shirt as well. It's a Stockmate t-shirt that is super comfortable and it is super stylish. And if you want to grab it for free, it's there in Stockmate. So excited to offer that for you guys and have you in our live sessions. It's the second link in the description again. We specifically, if you're thinking about like Stockmates or even investing the time of watching the channel, we specifically focus on AI stocks, quantum computing, and space and tech companies. That's it. That's the main focus for our channel and for the stocks that I personally like to invest in. I'll see you guys in the next video. Thanks so much for watching.